High equity life insurance policies designed for infinite banking provide a cash flow framework. The strategy teaches and positions its clients to apply the same principles used by the banks in their personal finances. It aims to build wealth by maximizing income and minimizing losses. You might be, how can I say, surprised, appalled to find out that a lot of the principles are diametrically opposed to a lot of the consumer behaviors that are reinforced in society. Hi everybody, it's Benita Starkey, founder of Keystar Insurance, and I'm welcoming you to this YouTube channel where we discuss a variety of processes, products, and concepts that support a continuous flow of currency. In this video, I'm going to give a 1,000-foot view of how the infinite banking system transforms a person's income distribution methods to increase profits. But before we get started, I'm going to invite you to like, share, and subscribe. And you might want to hit that notification bell so you don't miss a thing. Do you believe that the economy was designed to keep society indebted to banks and other financial institutions? I sure do. I mean, it's no happenstance that personal finances aren't a larger part of the school curriculum. I mean, think about it. Have you ever been taught or encouraged to save your money by someone outside of a family member? I sure haven't. A lot of customers share the same testimony. So let's see what Google has to say about saving. SAVE. Most asked questions. How do you define savings? How do you define savings? Second most asked question. What is the definition of saving and investment? According to Investopedia, savings is the amount of money left over after spending and other obligations are deducted from earnings. After spending and other obligations, I suppose that they're one of those other obligations, so they want you to pay them before you pay yourself. This is one of those direct oppositions that I spoke about earlier, but more on that in a minute. They go on to say that savings accounts are very safe, but tend to offer very low rates of return. Well, here's some truth, like 0.001% low. Savings can be invested, but it involves seeking to grow wealth by putting money at risk. Now, the good people at Investopedia know better than this. I mean, there are several types of investments, and they don't all involve risk. It's clear that we're being discouraged from saving here. And instead, we're encouraged to borrow for everything. You need a house? Get a mortgage for 30 years. You need a car? Financing. No credit? Buy here, pay here. So let's see what Google has to say about loans. LOANS. We have it. Loans for bad credit, loans with no credit, loans with online approval, home improvement loans, small business loans, student loans, payday loans, small personal loans. Well, I think it's pretty clear that we are being discouraged from saving and encouraged to borrow. The good news is that that this situation can be rectified. We simply have to recognize the problem, acknowledge the problem, and correct it. Let's take a look at the financial situation of the average American household as it relates to how they distribute their money. According to this study, only 3% of the total income was used for savings. The Federal Reserve Board's most recent report on the economic well-being of American households found that 40% of Americans don't have enough savings to cover a $400 emergency. And this is something that really needs to be addressed because things always have and always will happen. And if we don't have the resources to handle issues that arise, then we will always be at the mercy of predatory lenders such as high interest credit cards and checking the cash. The definition of interest is money paid regularly at a particular rate for the use of money lent or for delaying the repayment of a loan. So let's take a look at this. Now, according to that definition, Americans spend 34% of their hard-earned money for the opportunity to pay tomorrow for something that they bought today. Now, we've just got to do better. Now, this is one of those mindset things that we spoke about earlier that just needs to be addressed. I mean, the question that we should really be asking ourselves is this something that we need? Was it a need or was it a want? And I'm willing to bet that in most cases, they are wants, and sometimes we rationalize and disguise our wants as needs. But as we see, this is one of the largest wealth transfers because it zaps money from the available cash fund and leaves nothing to show. This is what keeps people in financial bondage. Fees and APR rates. I mean, late fees are as high as 30 to 45%. And a lot of times that's higher than the original payment. Interest just sucks up the majority of payments, which doubles and triples the length of the loan. Mortgage companies are notorious for taking their interest off of the top. When you make a payment on your mortgage, make your mortgage payment, they take their interest before any money is applied to the principal balance. Individual federal income tax rates alone range from 10 to 37%, and that number just keeps going up after paying city taxes and sales taxes. And there you have it. The cash flow of the average American household. Now let's take a look at how applying the infinite banking strategy rejuvenates the same financial portfolio. Taxes are decreased to 30%. Expendable income is increased to 33%. And savings is increased to 37%. A lot of people aren't aware that high equity policies provide a framework for distributing your cash. It's all about moving money to make money. And that makes infinite banking a great vehicle for moving your money and creating a legacy at the same time. So if you're ready to create your own legacy through self-financing using infinite banking, then click the link below and apply to become a client. And if you like this video, like, share, and subscribe. And don't forget to hit the notification bell so that you don't miss any new videos. And remember, you can have the perfect life.